Saw a headline this morning about the Fed meeting this week and forward guidance and the dot plot and Warsh not liking or not wanting potentially not wanting to give any forward guidance. Do you see how does something like that matter to markets if he pulls the dot plot altogether?
It could. I've always argued as a guy who's read the long transcripts of the Fed since grad school, and I started. So I guess you could call me a Fed watcher in some sense. The dot plots was meant to be like this guidance measure, but like if you look at the residual between dot plots and realize they're not very good, so you're just kind of like you're like kind of basically saying, okay, well, this is where we're in support of you, market, right? We're not in support of you. So I guess you would have to say that the distribution of outcomes in the market's eyes maybe widens some, so it should be somewhat negative for it. But I don't think that would be something that like, oh my god, that's gonna take down the market or anything like that. I just think it's more like, hey, there's gonna be a new sheriff in town, but we got
These
to
are the new
remember
rules. Yeah.
Jay Powell's staying on. So, whether or not he wanted to be, doing stuff right away, he might be slowed on that until they get rid of Jay Powell later in the year. I also think you guys got to remember, with the exception of Janet Yellen, almost all these guys come in and they have to establish credibility. So if you want to think back 20 some years ago when Bernanke came in and everyone's like, oh, it's helicopter Ben. Well, he raised 16 times in a row to start, right? And he turned out to be helicopter Ben. Like he lived up to his name, but he started off. Jay Powell had came out
Started out the same way.
swinging. Came out swinging when he started in 18. So much so that he got to the point where he stole Christmas, and we had Christmas Eve down 4 or 5%. And then he had to bend the knee because he didn't realize that the market really was already way too tight. Um, so yeah, I would guess that that will be the focus of the meeting. See how Warsh does. See how the conference call does. I also think, speaking of the dot plot, Steve, they should just get rid of those conference calls. Like, like back in the day, the Fed didn't even give you a press release. You had to look at the money supply statistics to see what they were doing. There was more risk premium in the market for it. I'm not saying
Yeah.
they're going to do that, but like that's my personal opinion.
And he might do it. He might. All right, so the trade from you, if we could call it one, is maybe a weekly 25 delta puts on the Qs, if you want to take an
Yeah, I mean, we just
asymmetric swing.
we just had the Nasdaq go up 5-6% since Thursday night. I mean, that's a big move, right? And so, if you were like so inclined, on a day like this where it just popped up and who's out there offering supply, traditionally markets pay you for offering liquidity to the market. So there could be something to that in essence. Oh, we lost Steve. Robert, what are you thinking on energy prices here?
What do I think, I think oil's going to settle in at 80 for a bit, 75 to 80, which is it should. It shouldn't plunge, but it shouldn't go back to 100. Then we'll see what happens with real economic demand and also stock rebuilding demand, right? Because there's going to be two different factors at work for a long time. So I think, though, we talked about this the last time we were together. You said, what do you think? I said, I think that oil's going to be structurally higher than it would have been, with this war and the massive drawdown in inventories. And I think people are also going to want to have more security with their supply, because this thing could fall apart in 2 days, right? So you can't pay for it as though it's a done deal if you're an oil buyer, because you got to fill the tanks no matter what. So I think there's going to be a geographical change on how oil gets to the Pacific markets, a significant one over time, and I think there's going to be a lot of inventory building. So I think oil holds, 75 ish for the next couple of years as a sort of a base. And then we'll see how things progress fundamentally as the time elapses. And you see where demand is and where inventories end up. But we weren't looking for a big year for demand before this. And at the margin, I think people were, dropping their demands, a few basis points and saying, oil demand to plunge or oil growth rate to plunge, that kind of crap. But it's it's in the forward curve. It's been in the curve for oil now for since the war started. The market didn't pay for this as being anything sustainable, and if you want to buy oil, I think it's a hard trade from the long side from here.
And on
Yeah,
the
I think
inflation side of that, I mean, I would be hard pressed to see corporates, all these companies globally that have raised price, be so quick to reduce it if they ever do.
Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.